Hello everyone, welcome to our corporate webinar where we will share with you the important insights from our 2024 Market Outlook Survey report and the risks and opportunities they present to FM service providers. My name is Kalal Amiman and I am your corporate contact within IWFM. Please feel free to get in touch with me if you have any questions relating to your corporate membership. I'll now pass the floor to my colleagues within the IWFM Insight team.
Thank you, Claire. Welcome to today's sessions. My name is Sophie Hooper and I'm the Head of Policy and Research, and with me I've got some esteemed colleagues and one of our board members. I will let them introduce shortly. But first I'll give a little bit of context to today's session, and I'm pretty excited about it because, as Claire said, we are going to share some very interesting unpublished data with you, and in preparation of this we may have gotten carried away a little bit about, oh, what would this mean, what would this mean? In any case, this is our annual State of the Nation report, and this year's survey is also a little bit of a reinvention from its former self, with some new elements tested and included. We are still providing a comprehensive picture of how the UK market has performed over the last year, how it might do in the coming 12 months, and all the positive and negative factors that you are wrestling with. The new bits we offer are deeper and wider insights into the current state of the market, and we are also drawing on data from new questions and a new section on the historic performance of the FM market based on ONS data. And really what we're trying to do with this section is to paint that broader context and picture of the value of workplace and facilities management, demonstrating its worth as an employer, a purchaser, and a change driver across UK PLC, leveraging workplaces, communities, and its buildings. So new questions are included on the future drivers of growth as well, and that should be very much of interest to you, our audience. We will cover the insights of the expanded EDI and sustainability questions, and I'm sure we will discuss some of those with the panel. And in anticipation of the general election taking place at some point in the near future, 4th of July might be mentioned, we did examine back in January and February how workplace and facilities management professionals are feeling and what the next government should do better to support the market in this area. Now, before I run through the agenda, I just wanted to thank everyone who participated this year to get us the results that gave us the insights. And it wouldn't be possible without you. You really responded to our call to get involved with our work, and we had twice the number of respondents than in 2023. So thank you very much. So how we will run the session of today, we're actually going to split it in 2 sessions, each with their own presentation. And first, Melissa, our new research manager, senior research manager, will look at the key trends at an organizational and FM market level. We'll then run a poll asking all of you to share your thoughts. Then we go into the discussion. We'll then do a quick sum of the opportunities, and then Melissa will run us through the second section. We'll do a poll, and then we'll have the second discussion before the final sum ups. Now, if you have a question for us at any point throughout the session, please just pop it through the Q&A box, and I'll draw them into the panel discussions that we will have taking place. Now, before I hand over to Melissa, can I please ask you to introduce yourself? And Andrew, I'll start with you.
Andrew Holder, I am the founder of Pareto FM, and I'm also vice chair of the IWFM.
Thank you. Melissa?
Hi everyone, I'm the senior research manager here at IWFM.
And Neil?
Thanks, Sophie. Good afternoon all. Neil Everett, I'm actually Director of Strategic Engagement. Look forward to the discussion.
Thank you very much. Melissa, can I please pass the floor to you to take us through the results?
Thank you. So as Sophie has mentioned, we're splitting this into 2 parts, and she's very kindly introduced us to the different parts. So let's dive right into part 1. Okay, so we've received a record number of responses, as Sophie has mentioned, and this is with 488 responses. Particularly, we're pleased to say that there's been an increase in responses from the FM service providers this year compared to last year. So we had 86 of those responses. So big thank you to all of those who took the time to take part. So this was carried out within in the earlier part of the year in February and March. Workplace and facilities managers from a wide variety of organizations were well represented in this research, as were FM service providers. So very similar to the type of respondents we had last year, but more of them. Mm-hmm. And now we'll dive straight into the organizational change. So inflation is felt everywhere, and this is quite clear from the results here. So what we're going to look at is the top two pie charts. The questions that we asked is what has happened to each of the following within your organization over the last 12 months. So they're color-coded, as you can see. So green indicates a positive change, so where there's an increase. And if it's a darker green, it's a more significant increase. Red shows a decrease, a dark red being significant decrease, and a grey means there's been no change. So on the left, we have employment costs, and this has really hit the FM service providers particularly hard, as 92% have reported an increase compared to 74% across the board in the last 12 months. So that's a noticeable jump and an important finding. Linking to that is the FTE headcount, which has seen a fairly muted change, just to the right there. Just over a third has increased in the headcount, but the rest are either reporting no change or a decrease. In the row below, and this is specifically for the FM service providers only that will ask these questions, to manage these increasing costs, they've been pushing through price increases, and a significant proportion, 32%, have been prioritizing the mergers and acquisition activity. That too is an important finding. As a result, we see a similar strong rise in turnover at 74%, but most importantly, profitability hasn't risen to the same degree. In other words, the FM service providers are still seeing squeezed margins as a result. So over here, we're looking specifically at budgets. So there's still a real concern about the inertia of the budgets going forward. So we're seeing that in the last year, there's only been 1% increase to 40%, whereas 33% have indicated a drop. The worst is the client-side public organization, where they're seeing 49% decrease against a 23% increase. But the FM service providers are seeing increased budgets at 58%. So that's really encouraging. And this is also an increase in the year before. More generally, we're asked the question about what the next 12 months would look like in the FM market in the UK. So what we're seeing here is that most people are still, either pessimists or optimists. Well, there's fewer pessimists and optimists, sorry. Most people are expecting no change and simply don't know. So there's still a lot of uncertainty in the market in the next 12 months. We're looking now specifically into what has happened in the last 12 months in terms of investment. So in the three categories here, we're looking at investment in skills and training, carbon reduction solutions, and technology. So positively, we're seeing a very good increase in investment in the carbon reduction solutions here, where over 60% have indicated that they've increased investment. There's also some increase in investment in technology, where over half of the respondents said they've increased it here, and 36% have shown an increase in skills and training, which is really valuable in addressing the skills shortages and bolstering the competence. We're looking at two new areas that we've asked for the first time in the survey this time round. It's to do with the area of space managed and workspace investment. Overall, more organizations have increased the area of space managed in the last 12 months than decreased. Interestingly, FM service providers indicated 43% increase in the area of space managed but the client side have indicated no change. Workspace investment is more likely to have increased than decreased too. But the majority of FM service providers said that there had been no change to workspace investment. But what does this show in other sectors? So I think this is probably a good time for our first poll.
And just to support this, what are the sectors investing the most in workspace? Oops, something dropped off in the title there. But you can see all of the different sectors there listed. You know the answer, but we would love to get your thoughts on this, and we'll give you another minute. So where is the greatest investment in workspace taking place on the client side? Right, I think everyone should have had the opportunity now to look through it. Can we please have the results?
Okay, so 43% are saying financial and insurance activities. So that's very interesting. So let me show you what we found in the survey. So as you can see here, there's overall, generally 40% have shown an increase, which is great here, and 18% have shown a decrease. But financial and insurance activities are not have not increased significantly. They have shown an increase, but the one that has shown the most increase from the data that we have is the arts, entertainment, and recreation, where they've invested 56% has shown an increase, and 11% significantly has increased that as well. Looking at those that have decreased their investment, electricity, gas, and water supply are coming up with 67%, and overall 20% of wholesale and retail have decreased that significantly. So that's really interesting how that compares to the poll. Further on, we've also drilled it down to the other investments, and we're looking at now the next one, which is the carbon reduction, which we knew had showed a good increase across the board. Significantly, we can see that there's none that said they've decreased it significantly, so that's great news. Again, electricity, gas, and water supply have stood out as being decreased in the investment here. Wholesale and retail have shown no change, majority of it, but human health and social work activities have seen a 100% increase in investment in carbon reduction here, which is really great to see. And the next slide, we're showing the breakdown in terms of investment in technology. So again, well, apologies for that. So most of them have seen some increase in technology, which is great. So it shows how important technology is going forward. Electricity, gas, and water supply, again, have showed a decrease here. And we're seeing really positive changes again in arts, entertainment, and recreation, and human health and social work activities are showing 20% of significant increase of investment here. So I'll pass this over now back to Sophie.
Thank you very much, Melissa. And to be honest, I'm going to go straight to the panel and ask them for their feedback on these results, because I don't know about you, but when we saw the breakdown of this, it was really very interesting for us. Could we take the slides down for a moment, please? Andrew, you've come off mute.
Yeah, I think the results are really interesting and probably tell us some things that we weren't necessarily expecting. I think the investment, just going on that last point there, the investment piece is really interesting, especially in the sectors. So looking at like the utilities sector and things, so, it's in terms of reducing investment, but the arts are increasing. I wonder whether there was a period 5, 7, 10 years ago that there was a massive level of investment into the utilities space and within that type of organization. And perhaps they've been through that investment piece now. But what's really interesting is if we look at what the press is telling us and the results, the oil and gas companies are producing some of the biggest profitabilities that we've ever seen, and within their own histories that they've ever seen too. So it's really quite interesting that the perhaps employee feedback is that area is reducing investment. So it seems to be maybe a disconnection between those. But perhaps there was a concern within that sector that things were going to be wobbly for a while. So they just were held up on investment a little bit. And actually that may have led to bigger profits within that space too. I think the other thing that I found quite interesting is the fact that client side are saying they haven't seen a change in the amount of space. So generally, I think the overall result was there hadn't been much of a change. Now, if you just sort of have general conversations within the sector, a lot of clients are saying that they're being asked to look at reducing space because obviously they have less requirements for the number of desks that they had before COVID. And lease lengths tend to be around 5 years, 7 years, maybe at the moment, that sort of maximum level. So I think a lot of organizations are coming up to the point where post the pandemic, their lease events are now coming up. And they're now really considering, do they need all that space they had before? But also without penalty, they have the ability to exit. So I think these results probably show in that area that those events haven't necessarily taken place yet, but I would still think they will do. And I wonder in the next 3 years, if you ran this poll again, I think that the client side result of that would be higher because there'd be more ability. Many customers, I think at the moment, or clients within the sector are like subletting their spare space because they don't have the ability to break. So yeah, I think some really interesting things. And just the final one on the service provider side, brilliant to see the investment in those different areas. I think the service providers, the biggest learning I've just taken from that information is that there is a big investment going into carbon reduction. And it seems to me that my views on sustainability are clear and public, but I think there's a lot more work to do within that area. But the fact that people are talking about investing in that is great. And to continue to create competitive advantage within the service provider space, I think contractors are going to have to show that they can be the beacon of expertise and positivity for sustainability and carbon reduction for the customers. Certainly as the targets for 2050 net zero start to get closer and they sort of come more under the microscope. So yeah, results that perhaps is not what we would have expected, but really interesting nonetheless. And actually a sample size of nearly 500 is really positive. So actually get a good skew of what we have here. So
absolutely. Before I bring Neil in, I think it's worthwhile picking up on some of the things. I think you're absolutely right, Andrew, about the lag on breaking leases. I think we haven't really seen that come in at this point in time. We will definitely retain these questions coming years because we obviously want to map that. But yeah, the biggest surprise possibly was the electricity, gas and water supply, and possibly not the financial sector leading. Because their profits have been absolutely massive, and it's kind of across the board. There's really a trend there that they are not investing. I'm quite pleased to see for those amongst us who listen to Radio 4, quite a lot of the themes have come back in the morning, where our results are absolutely being validated more widely as well. Neil, can I just bring you in to bring in your perspectives of some of these results, please?
Yeah, I mean, I think Andrew's covered a lot of it, Sophie. I think there's probably a couple of points I was just going to make. One was obviously to, I think as you've said, close to 500 respondents, I think is fantastic. And obviously big thanks to everyone who's contributed to that kind of insight. I think the thing with these kind of, what we find, every year is there's always kind of surprises, but I think, it's kind of, more than anything, it kind of provokes a discussion, doesn't it? It provokes that kind of debate about actually, what is coming down the track. And I think that kind of thing is always going to be good for the professional, for the market. I think one of the, I suppose the high level kind of insights that I found interesting was actually almost that kind of contraction of optimists and pessimists. I think historically we found quite a distinction between the two, and actually we found almost a kind of middle ground. I suppose to an extent that's probably, kind of flavoured by what's coming up, early next month. But interesting that, that seemed to come out.
I think you're right, Neil. It's absolutely indicative of the time that we're living in, not just because of the general election here in the UK, but the shifting sands that can take place all across the globe. 2024 is the year of most of the elections, and given some of the narratives that are ongoing, including narratives that would drive more protectionism, you can see why people that need to make investments are becoming a lot more uncertain and cautious about where that's going to go. Neil, I would like to, unless Andrew, you wanted to come in at this.
No, I think the survey was done before the general election was announced, right? Just confirming.
Correct, but we all knew that it was going to come.
It was coming, but we didn't know when.
That's what
I just think
the question.
From the service provider's perspective, certainly for the businesses that are owner managed, or the shareholders are within the business, that sort of stuff, I think a change in government is a really interesting time for owner managers of organizations, certainly on the service provider side, because there's always a concern around changes in capital gains tax and any other taxes that come with either releasing profits from businesses or selling businesses from a merger and acquisition perspective. So I think there's been a huge amount of uncertainty for service providers for some time, probably over 12 months in terms of potentially a new government. And, political views aside, there seems to be a general feeling that Labour have a good chance at the moment of getting in. And generally, Conservatives can be considered to be protecting the wealthy, and people are concerned that Labour may be not protection of the wealthy in the future. So I think there is a really interesting period that after this political thing has gone through and we understand what the new government looks like, you would hope that there'd be some incentives from a new government around investment and could create more opportunities. But yeah, it's going to be a fascinating time over the next 6 to 12 months in terms of what that looks like. And hopefully it will drive more investment post a new government when everybody understands what it looks like for their own personal gain and for the organisations as well.
Fingers crossed, Andrew. We might get back to the election point later on. Neil, I would like to come to you. Obviously, one of the possibly not surprising results was that employment costs were driven up. There are a number of school of thoughts around this. Some of it might be because of the merger and acquisition activity, but obviously we're also seeing wage inflation. The question now to you is, what are your thoughts around wage inflation? Because it doesn't just seem to be driven by economic inflation, but the slow rate of decline of the wage inflation, could that be attributed to the skills gap? That's some terminology that most people will be aware of within the FM sector.
Yeah, and I think there's quite a lot of nuance, I think, to this question. We had a discussion last week with the chairs of the regions, the special interest groups, and the networks about this kind of subject. And actually, there was quite a lot of points made. Actually, it's quite specific to certain job roles. In many cases, certainly it's also it kind of depends on job levels as well. That gets factored in. But it does link, as you said, Sophie, to in a lot of areas a lack of skills. So even if you're paying higher salaries potentially, there's still to an extent an issue with the skills that you're kind of bringing in. So to bring in skills, you're in effect having to pay more for those skills to come into the business. But I think obviously the imperative for employers is it's that kind of making yourself as attractive as possible, in terms of the recruitment, but also developing and retaining good staff. That's absolutely key. But but we heard some, and we hear on a sort of daily, weekly basis talking to employers. It is very difficult to recruit, retain, and develop good people. That's a consistent message.
And that will definitely be some messaging that will be resonated in our manifesto. Andrew, did you want to?
Yeah. Look, it can be no surprise that that result is so high in terms of the increase in salaries going up. I would have anticipated that. If you, I can't quote the exact number, but I think we've had a 6% increase in salary inflation as the United Kingdom. And with the inflation rates as high as they were, and organisations desperate to keep hold of certain team members, there have been pay rises after pay rises. And not forgetting minimum wage, or the living wage as it's called, continuing to push those costs up. And of course, I'm a massive fan of increases in minimum wage because it just helps the staff, at the lower end of the pay grade within FM actually continue to have increases. But for service providers, that's a challenge sometimes because they need to pass those costs on to the customers, and customers, they should be aware that these things are happening because this is a national and legal change, but it still puts some pressure around costs for both sides of the organization. So yeah, to some degree, I was surprised that there were some people that haven't seen increases in wage costs, through this last period, because I think with inflation at the level that it was, I think it's probably one of the most challenging salary times that there's been. I would agree with Neil, there's still challenges around attraction and retention of staff with the right skill sets. But we're still seeing a good pool of labour out there. But yeah, certainly the cost of some skilled individuals has gone up through this time. But I think we will continue to see increase in staff costs over the next 36 months, especially as minimum wage within FM continues to drive those things up.
Thank you, Andrew. I want to stay with you because I think, I'd love your insight on how best to deal with clients' stretched budgets when also FM service providers are seeing more increased budgets themselves. What do you think the main driver causes for increased FM service provider budgets? Well, those are actually two questions. Let's stick to how best to deal with client stretched budgets.
Again, my views on this are public and straightforward. For me, service providers have to flex with their customers. You have to. And actually, you can't, or as a service provider, you can't always expect the customer to give more. And in the good times, you can take more, you can do more projects, you can take on additional services. But in the challenging times, which I would put ourselves in at the moment, you have to flex down with the customers as well and give that flexibility. So for me, this isn't a case of how can you get the client to spend more. This is a case of working directly with the customer to make sure that you have the right fit of services for where they are as an organization. We should also remember a lot of the time, the reason clients at an FM level make decisions is often because the CFO or the board have decided that they need to control costs. And with inflation and wage inflation being where it's been recently, you can understand why clients would want to, control their costs. In terms of service providers, I was intrigued at, I think it was 48% saying that they'd had an increase in budget. Now, that could be because there are fewer service providers serving the customers. So actually, the amount of customers they serve has grown. And maybe there are some really, fast growth service providers that have completed the survey that have actually seen their budgets increase. You look at Pareto's grown another 25% since this survey was last done. So actually, you'd expect people within there to actually have bigger budgets to manage because they're looking after more customers. So I think for me, customers will always go through these periods of trying to control and restrict their budgets, and we have to flex with them. And look, my word to the sector is if you don't flex with them, they'll find another service provider that will flex with them, and you have to continue that flexibility. And service providers, it's amazing to see that they're continuing to grow and that their budgets are growing, because that's positive for me and positive for the opportunities within those different service providers that are there. So yeah, but we will come out of the other side of this, as we always do in our cyclical nature of our economy. But it's just riding those different waves with the customers now.
Excellent. I'm going to draw this part to a close. And if I could have the slides back, please, before I hand over to Melissa, I just want to run through some of the opportunities. Obviously, we've seen some of the high investment sectors, and we really would encourage you to offer those specialized and innovative solutions that cater for their unique and flexible needs. And especially workplace management, carbon reduction, climate and technology are key areas to engage your clients on. And given that we have those employment wages that those employment costs continuing to wage, really it's important to continue to invest in your skills, both from a skills gap and talent attraction and skills retention model. That said, even where there are areas where there isn't necessarily a huge amount of spending going on or moderate spending, really keep on engaging with your clients, customers to demonstrate that value through incremental improvement, because they will be your clients of the future, and they can definitely use help with business cases, because that is something that we see throughout our surveys, that business cases are still a problem area for many FMs because they continue to lack data inputs, and there is also a lack of aligning with the language of business and ESG outcomes. And as FM service providers, you've got a huge role in educating, awareness raising, and advising different sectors that have uncertainty, and that will help create future opportunities. But I would say that one of the key takeaways from the survey really is we have seen that positive link between investment in technology, carbon reduction solutions and skills, and levels of profitability within FM service providers. So keep investing and help your clients to invest in those areas. Melissa, I'll hand over to you to introduce the second session.
Thank you, Sophie. For the next set of findings, we're going to look into EDI. So the question we asked was, how will your organizations focus on equity, diversity, and inclusion change in the next 12 months? We're seeing a continued expected increase, which is very encouraging. For specifically the FM service providers, we are seeing a 58% showing an increase of the focus, with 23% of that being increased significantly. If we compare this to the private, third, and the public sector, which are averaging around 10 and 11%, this is all really encouraging. We've also asked our respondents if they've if they have drawn up their EDI plans, and 52% of them have said that they have. So this is all moving in the right direction. The next EDI question we asked was, how would you describe the level of involvement of WFM stakeholders in drawing up these plans? Overall, 84% had some involvement, which is positive. Looking especially at FM service providers, in comparison to the others, we've got 39% being key stakeholders here in this process. If I look at the private and the public sector, majority of them, 27 and 33% were ordinary stakeholders. And if we compare that to the third sector, 33% had little involvement in the process. We're moving on to sustainability now. So the question that we asked was, what are the priority areas for sustainability in your organization over the next 12 months? Right at the top, we're seeing carbon reduction and energy efficiency, which are being prioritized by more than 50% of organizations. One interesting finding that we're seeing is that FM service providers have bucked the trend, and the top two priorities were shown as carbon and social value instead of carbon and energy. So looking a bit more into this, we can see this is the breakdown of priority areas against the organization types. So as expected here, carbon is really showing a very positive 60% across the board on average. But social value is being prioritized as 50% of the service providers. And looking across to the client side, they are not necessarily prioritizing social value, but have other priority areas instead. Okay. Moving on to the next part. We are now looking at a question that we asked in our previous sustainability survey, and this is asked only to the client side only, in terms of the level of involvement of FM stakeholders in drawing up energy efficiency, decarbonization, or net zero plans. So interestingly here, we can see that overall we're showing, apologies for that. We're showing that 1 in 3 were ordinary stakeholders at best in terms of the involvement with sustainability. If we compare this to what we're seeing in the EDI, This has come as a surprise because the results show the lack of involvement in carbon and energy as compared to the EDI. So an opportunity here may be to support clients to take up these plans going forward. Next, we looked at budgets and we asked what the approximate value of the annual WFM budget is within the organization. So they still have significant buying power. So we can see 8% of the respondents have over £100 million annual budget, and 32% have over £10 million. So this is all still very encouraging news for the sector. And now, moving on to the general election. So this is what we've asked from a business perspective. How are you feeling about the outcome of the general election? Significantly more respondents were feeling pessimistic about the outcome of the next general election, 37% rather than optimistic being 16%. It shows a high level of uncertainty of many businesses at present. We asked a follow-up question in relation to the general election. What measures would you most like the elected government to take to better support the FM market? So we can see here, top of the list is the focus on growing the economy, where 63% of the respondents have answered that. 43% said to develop a coherent plan on achieving net zero. We delved a little deeper into analysing the results here by breaking it down into what FM service providers thought of this question in particular. So I think it's an opportune time to run our second poll for the day.
What measures would you most like the elected government to take to better support the FM market? And again, please do scroll down because there's quite a few options. We've replicated the options within the actual survey, and we'll see if there is alignment or a misalignment with along the client side or the FM sector. But really, we'd like to understand your priorities of the people here on the call. The reason why this is also important is not only is it helping to shape some of the conversations we're having with our corporate members, from a manifesto perspective, it also very much informs support moving forward. What are the key areas we should be focusing on? Where is there a lack of support? Or how can we best shape our support moving forward across these different areas? I think that should have given sufficient amount of time to people to respond, and I hope that we will get some results.
Okay, a very high percentage, 67% agrees with is saying it should be carbon reduction, climate change, and net zero. Okay, shall we reveal the answers from the survey?
Yes, please.
Yes. So here we can see from the survey result, we're getting 64% of FM service provider agreeing with the overall that the focus should be on growing the economy. The second option for overall is that to develop a coherent plan on achieving net zero. However, from the survey, the FM service providers have got it split equally at 34%, with making it easier to recruit talent from outside the UK. So this is all very interesting finding, and perhaps, I guess, a reflection of the employment costs that we're seeing as well. So I shall pass it back now to Sophie.
Thank you very much. And Andrew and Neil, may I just invite you again for some top line comments on some of these results, which were very fascinating.
Neil, after you this time. I took the limelight last time. I'll let you go first.
Thanks, Andrew. I've got to say, Melissa, there's quite a lot to unpack in those 4 or 5 slides. You know, I think that's key. It was, for me, it was really interesting. You know, about the you know, what should the government focus on in terms of because that, you know, that combination of growing the economy, but also clear direction around the net zero stuff is so key, isn't it? And that kind of, you know, I think Andrew alluded to it earlier in terms of the investment. That confidence has got to be I mean, nurtured to you know, to enable investment to be made. You know, that's got to be clear. So I think, you know, clarity and confidence, I think, is absolutely key. You know, and that kind of, to an extent, wraps around all of the other kind of things that people, you know, want the government to, you know, to actually take on board.
Thanks, Neil. I think, look, from my side, there's a really, really interesting trend that service providers really need to listen to here. And that is the difference between the service providers' focus on ED&I and social value and the client side focus on ED&I and social value. And they are quite demonstrably different when you look at these percentages. And certainly there are some positives. The positives I'm going to take away is that in 84% of the time, service providers, staff are involved in the overall development of ED&I, and that's a positive thing. And on client side, you're still looking at 40%, which is great in terms of actually having involvement with that. But look, we're saying 60% rise in focus on ED&I for service providers and 50% for social value. And the client side is more like 11% and 20% respectively. So I think it's so interesting because we're in a sector where everyone seems to be trying to demonstrate their values as a service provider around ED&I and social value and being a great business, which continue to be important, but it's not quite registering as high on the customers' requirements in terms of what they're saying is important. And I think that's fascinating, and it's probably not what we would expect to see. We probably would have hoped for a higher one from the customer perspective. Clearly, there is a much bigger focus on carbon and reducing carbon and controlling energy costs. And again, that's not a surprise because we know those net zero targets are coming up and they're starting to come within view. But also we know the cost of utilities and the volatility around the cost of utilities has really had a massive focus on that. But also, I think there is interesting to see a lack of involvement around carbon management on the FM side of the overall decision making. You know, we said that 1 in 3 are not really involved, which seems a bit bonkers to me because as FM, we're controlling probably the vast majority of energy management within an organization. So there has to be some involvement from FMs. And I just want one number really made me smile. 37% of respondents are pessimistic about the outcome of the general election. Well, if those 37% of people got together and voted, you know, in a way, they might be happy about the outcome of the general election. So that was just something that I had to smile about. We have the power to make change through general elections, certainly as a collective. So don't let the pessimistic result be already predetermined.
That's hilarious, Andrew. And thankfully, you didn't express any opinion for a single party, because then I would have had to slap on the disclaimer that other parties are available to vote for.
No,
but we'll quickly add it to the lines. Vote, whatever you do. In any case, I do want to pick up on the EDI, although I think I might just limit that to the statement because I think much of the insight has already been discussed. I think the difference there is, especially on the private sector side, between the private sector and the FM service providers is really statistically negligible. And I would just say that the role of FM in creating in-house or service provider side is in creating those inclusive workspaces is obviously incredibly important. And that's why we do see that remains quite high on the agenda. And obviously the second part, the reason why I would say from our side, why we think there is that increase is because of the skills gap. You know, EDI is obviously one of the mitigating strategies that employers are using to stem the skills gap, in addition to many of the other drivers for EDI. But it was really encouraging to see the FM engagement within the development of those plans, because traditionally seen, we wouldn't naturally have assumed that they did. Whereas on the other side, on the decarbonisation and the planning of decarbonisation, we would absolutely expect FMs to add value because most of the activity falls within their remit. So I would say that there's definitely an opportunity in there for our service providers. And that brings me to the question, rather than grandstanding, about how FM service providers can better support their clients and the FM teams within client side to put investment where it can make an impact and unlock that investment. Andrew, can I start with you, because that is really kind of your specialism?
Yeah, I think so. I think the whole thing is really interesting, and perhaps what I'm about to say is a bit negative, but FM, as all of a sudden we've got this great service providers, this great drive around driving ED&I and social value and ESG, and there's a lot of engagement. I think 84% of engagement in service providers within their own organizations around doing that. But the fact that the customers are sort of putting it lower down their priority list is perhaps disappointing, because FM has worked really hard on this workplace experience piece. And I think in the time I've been in the sector, this whole idea of moving away from toilets and boilers and actually to the workplace experience has really developed itself in the last 15 years that I've been involved. So in terms of what FMs can bring, what service providers can bring, it has to be that focus around energy reduction, utility management, cost management, because that is what the customers are saying that they're asking for within this survey. And I think what's brilliant about service providers is they have expertise in energy management and carbon reduction and cost management and utility purchasing, et cetera, et cetera. And when you are looking after multiple customers, some organizations are looking after hundreds, if not thousands of customers, that collective learning that the service providers are taking from that and taking to new customers is a great opportunity. So I think we just cannot lose sight of the fact that FM service providers have some of the best technical talent within the whole of the sector, both client side and service provider side. And it's making sure we harness that talent and expertise and get that into those client organizations, and that they harness it and they use it. But I can't help but express my disappointment in that gap between the client and service provider work on ED&I and ESG and social value, because I just think that the sector has done so much brilliant work on the service provider side to increase that and enhance it. But just a final point, that said, in a challenging financial economy, I still think, and as a capitalist at heart, that things like the nicer stuff, like the ESG and EDI, etc., sometimes take a back seat, because all of a sudden financial decisions need to be made, and we're trying to make the right decision for the future of the organization. Although that is short-sighted, because investment in EDI, ESG, and social value will ultimately create better financial returns for all organizations in the long term. So I think, in summary, service providers just need to continue to play on that expertise they have around the technical and energy side, and because that is what customers are asking for, according to the poll.
Thank you for that, Andrew. Now, Neil, I'm going to give you a moment to think about this around really, as an employer, what some of the key impact initiatives are that people should be taking forward on the ED&I area. But before we're going there, I just want to round up on the social value discrepancy, that huge misalignment. And I almost wonder, Andrew, if that is in part because of the way that a whole bunch of these elements like carbon reduction, ED&I, etc., are packaged up in social value for the client. What do you think? Is there a separation out within the tenders, or does it all still fall within social value?
If you take a specific tender focus, often there will be separate scoring points for social value against energy and sustainability. So I still think social value, ED&I, and ESG, it's a growing, changing, adapting, learning part of all of our economy, that we are working within. So it's still not defined in its most, purest way in terms of what it means. Personally, my view, social value wouldn't necessarily include sustainability and environmental initiatives. And actually, when you look at some of the larger FM organizations who talk about the hundreds of millions that they've invested into social value, actually, that's not generally talking about sustainability. That's talking about where people live, the type of people that they're employing, low wage income, all that sort of stuff. So I think for me, there's still a lack of definement around those, even the terms that we use and what it actually means. And certainly in government tendering, you certainly see a difference in scoring criteria for social value and environmental. But it's the opportunity again. FM has all these different skills that we're just describing here. They're all available for us as service providers to provide to the customers. So it's just continuing to lobby the customers to some degree to make sure they're aware that all of those skill sets are available within our teams and that they're able to be delivered to them. But I do wonder as time goes on, you know, in terms of if there will be a greater definition of what social value means and what sustainability means and what environmental means. Because in my purest view, sustainability isn't just about you know, trees and utilities. It is about people, because it's such an important part of you know, the sustainability tree of moving it forward. So
thank you, Andrew. I think certainly the evidence in this particular survey seems to demonstrate that there's huge confusion around the concepts of sustainability, ESG, and social value, and how they're often used interchangeable, while they are very distinct. I do think that sustainability, or rather social value, is more about implementing the broadest possible sustainability within procurement. But I think the lack of understanding around the terminology, and it's so difficult when in fact it should be local needs based, and it's more of a process of determining what social value means to a specific contract. It makes it almost impossible to really give that very specific definition. Neil, coming to you, we've had some questions from the audience, and I'll stick to EDI because that's what you've had some time to think about. Do you think that the gap in focus on ED&I between suppliers and clients comes down to being used as a recruitment retention advantage on the client side, rather than a potential advantage in sales on the supplier side?
I think you use the terminology mitigation strategy, Sophie, and I think, you know, that there is the case to be made for that. I think on the service provider side, I think it was interesting actually the discussion that you and Andrew were just having about the kind of the mixing of the terminologies that are used in this area, and I think that's an absolutely you know, key driver for the market, for the profession, because I think until there's absolute clarity and these elements are kind of included as part of the overall strategy for, you know, the customer businesses, there's always going to be, if you're not careful, it's just another thing to kind of you know, it can become a tick box exercise in you know, the worst case. So I think it's continuing to kind of, you know, drive it as part of core business, you know, for the customers, which is then going to kind of inform probably the, you know, to an extent the tactical response from the service provider side. I think that's the key. You know, we need to really embed it within, you know, the major employers within the economy, because they're the ones who are taking the lead on actually, you know, what's requested. So I think that's got to be an absolute key. But as you know better than I do, Sophie, the research that we did recently, you know, we know as a profession we've got significant work to do. You know, that's kind of, we can't get away from that fact. But I do think there's some fantastic initiatives taking place. But I think there's a couple of things. One is clarifying the language to an extent, but also, you know, the action plans around some of the kind of initiatives that we're talking about. You know, how can we make the difference, and probably to an extent, how can we measure the difference that we're making as well? You know, it's quite easy to make incremental improvements, but actually to look back after a few years and say, you know, this is the progress we've made. That's pretty key to kind of make that change.
Thank you, Neil. And the report Neil was referring to can be found on our website if you Google IWFM EDI, and that really looks at the systemic changes that need to be made and how both professional bodies, employers, and practitioners such as you on the call can collaborate together to shift the agenda in this particular area, because I think the person who asked the question, is quite right. There are recruitment and retention advantages. It's not just about an advantage in sales, which, there is an element to it in making sure that as service providers, you are doing things for the broader community and that you are seen to be doing that. But as we know from the investment in skills need, the wage inflation, etc., the impact of the skills gap is that really people need to engage with this particular agenda as one of the mitigations. And I do think from what we're seeing across the arena that FM partners, there is some fabulous work going on in this particular area that they can share with their clients. Andrew, 1 minute response. Can you add something to the work that's being done as an employer?
Yeah, I just wanted to add, I think Shiv, who's asked the question there, I think raises a really good point as well. The reason there may be a discrepancy between the two, is because often clients are using service providers to enhance the ED&I makeups of their teams and building specific team roles. And that's what service providers can do particularly well. Our experience in Pareto often is that, trying to bring diversity in and build teams. Because I think service providers are so brilliant at recruitment compared to the customers sometimes because of the big processes that they have to go through. I think, Shiv, one of the leaders within FM of this whole area of trying to build diverse teams and build ED&I, it's a really interesting point. And that might be why there's a gap between those two things. So I just think as a summary, FM service providers have all the skills that we need to increase and enhance ED&I social value, ESG for customers. And it's just about making sure that we can tell that story well.
Brilliant. I'm going to have to draw it to a close there, so I can do a little bit of a sum up of some of the opportunities that we've now discussed. And I hope that we've covered and put some meat on the bones of some of these. Obviously, the first one around FMs continuing to have significant buying power, that's quite an obvious one. Continue that focus on carbon reduction and renewable energy and enhancing energy efficiency. But do go on beyond that and support client-side FMs to take ownership of their holistic decarbonisation plans. We've got a sustainability survey coming up that is really going to look and delve deeper in the investment levels that are taking place, the timelines that the investment needs to be expanded on, with really the main objectives being that we want to be able to support our clients to unlock the levels of investment that are required to achieve net zero by 2050, if not before. Although let's drop the pretense of the before on that. Really, those holistic strategies are necessary, and you are in a brilliant position to help your clients with that. And also on the ED&I element, not only is it right to create inclusive workplaces, through our own research in that, we have seen what the cost is if you don't invest in that. People leave the profession, and that is definitely not something that we can afford within WFM. They might have mental health concerns. So the impacts are really felt when you do not create inclusive workplaces. But also, especially for FM, it will help fill that talent and skills gap. So do share your knowledge, because many of you are very good at this, so continue to deploy that knowledge. Then thank you very much. That brings us really to the end of this particular session. I hope that you have found this a very useful session. I would really like to extend my thanks to Andrew, Neil, and Melissa for providing not just the brilliant data or the exciting data in my book, but also to then add the further insights. Listeners, really thank you for your time and your inputs in participating in the survey. Without you, we wouldn't be here. A recording will be available for anyone who wants to listen again, and you can also share that recording with colleagues. You've seen quite a bit of the report, but there are some more sections in the report. We just wanted to make sure that we could explore and give sufficient airtime to the issues we've discussed. But there is some data available around outsourcing and the shift towards that. So use the QR code on the slides. And for those members that want to copy, it is freely downloadable. If you're not a member, please speak to Claire. And I also want to highlight that we are currently running a skills survey that aims to give the profession and the sector the skills of the future. And given the amount of investment that is taking place, we want to make sure that we're getting it right, basically. So please participate in it. It is closing early July, but also share this with your L&D colleagues within your organizations. And then Claire, may I please hand back to you for final?
You may, yeah.
Thank you.
Thanks, Sophie. So we hope you enjoyed this corporate webinar. Your CPD number is now on screen. We will be asking for your feedback via email. Please do let us know if we can do better. If anyone has any, if anyone is interested in collaborating on research like the Market Outlook or any other products, then please do get in touch. Thank you, and we look forward to seeing you again next time.
Thank you all.
Thanks, everyone.
Bye.
Thank you. Bye.